Market moves coming at you. Piper Jaffray just initiated coverage on a bunch of cannabis-related stocks, sending CGC yet alone up 14% today. We're going to go through the article and tell you what's in it and tell you why things are popping. Stay tuned. But first, I want to remind everyone, hit that subscribe button. Please, please, please hit that subscribe button. You won't regret it. This is 40 videos in a pot stock playlist. I'm going to link to the top right-hand corner. Check it out. It has all the videos from when I shorted Tilray at $300 till when I covered all these awesome pot stocks down here. Aurora, CGC, CanTrust. But this playlist is just the start. We're going to be covering this throughout the next couple months and the years to follow the pot industry and see what takes off. So great videos there, but we're going to get into the article right now. So right away, this is a very bullish article on the cannabis industry, and it goes into depth on Tilray and Canopy growth. So right now, if I go to my charts, I'm just going to check out Canopy growth. We got CGC up 12% today, hitting $33. And I was telling everyone, if it breaks through this triangle, this would be a huge run, and which it did. So it had 1 week above it, and then the next week it ran hard. So CGC has plenty of room to run to that $40 level, and the analyst Piper is expecting it to pop 30 to 40% in the next coming months. So he's very bullish on this stock. And if we check out Tilray is very interesting too, because this stock is coming on its lockup period in 7 days. So all that means is that all these investors and all these workers for the company, they can sell their IPO shares or their shares of the company on January 15th. So this is called the lockup expiration. So this is kind of a bearish thing to me, because there's only 7 million shares that were IPO'd, and there's about 70 to 90 million shares that are going to enter the market in the next couple months. So that is huge dilution. It's almost a 10x on the shares, and this volume here is so minimal that if it comes up with maybe, let's say, 10 million shares, this volume's going to pop with all that dilution coming in. So a lot of dilution could come to Tilray. I'm a little nervous next week. I'm going to be watching and playing whatever direction it takes, but right now it's making a little nice run up. This could be a good short opportunity, because if you think about it, everyone that is going to be able to sell their shares are going to be even more excited if the stock is up 15 points or 20 points. So once the stock is done popping, I'm going to put some shorts on, and I do think it's going to drop hard next week. But let's get into the nitty-gritty of this article and understand why he initiated coverage. What does coverage even mean? And this article is great because it actually explains what overweight coverage is. So overweight, this is the rating he put on Canopy Growth and Tilray. Overweight just means that it's undervalued. So it doesn't make too much sense. It's kind of backwards. And this is an example. If a particular stock is selling for $500 and the analyst feels that the stock is worth $600, the stock would be declared overweight. So this just means it has room to run. If it's overweight, we have room to run in the next couple months. And he's projecting, if I head to here, he says 30 to 40% on Canopy Growth. So 40% rise in the next 12 months. That's huge. He's also projecting revenues to hit $1 billion in the next 18 months, which would be massive. So that would be very exciting as well. That would boost their price to earnings. It would make their metrics look very tasty. So I just want to go over this one more time. So he's expecting the rise of Canopy Growth to be 40% in the next 12 months. He's also expecting revenue to be in the 1 billion range in the next 18 months. So right now its price to sales is at 100. So we're just going to calculate what would happen if their revenue went to 1 billion. So right now the price to sales is 100. So the market cap is $6 billion. And if they make 1 billion in a year, that would put their price to sales at 6. So 6 divided by 1. And that would put the stock potential, we're going to do this right now, would be 100 divided by 6. So the stock could go up 16 times at this rate. So this would be $550 for this stock. So if the revenue does go to $1 billion, this could be a $500 $650 stock. That's crazy. And the bottom part down here, we're just going to go to the last one. They did call Tilray as well overweight, and I don't agree in the short term, but maybe in the long term. And he is very bullish on the industry in general. That's partially why he wrote this article. He expects the industry in the US alone to be $80 billion in 2030. I mean, we can throw out these numbers all day, but basically it's going to grow at a massive and impressive rate. And this is just going to boost up the earnings from the leaders and from anybody else who is getting any of this market share. So what I want to do now is find the best stocks in the industry, because obviously this thing is taking off and everything's kind of cheap right now. I do think right now is the best time to look into everything and figure out what you want to hold long term. So tomorrow I'm going to release a video on my favorite pot stocks of 2019, so stay tuned for that. But until then, I want you to list your 3 top pot stocks on the bottom. I'd greatly appreciate it, and we'll get the debate rolling. This is Market Moves signing off. Peace. For more information on the Market Mover Indicator, free consultation talks, and courses, head to the website marketmovesmatt.com. Don't forget to hit that subscribe button and check out the latest and popular videos I have uploaded.